Do you get anxious about managing cash in your business? Does the fear of an unsure future keeps you awake at night? And do you want to have peace of mind and get rid of your financial worries? If so, then this video is for you. Hi, I'm Shishir. I'm financial transformation coach for female entrepreneurs who wants to scale their business fast. My goal with this channel is to teach you actionable profit growth and cash flow optimization strategies. I'll also interview female entrepreneurs running uber profitable businesses. We'll deconstruct the business model, talk about the mistakes they have made so that you can avoid these mistakes and only use what it worked for them in your business. If that sounds like your thing, don't forget to subscribe and hit the notification bell right now. In this video, I'm going to break down the process of reading your cash flow statement into your 5 simple steps and make it really easy for you. I know this process works because I've used the same practical steps for the last 16 years helping my clients who are doing revenue range from 40,000 to 40 million pounds. So wherever you are in this business journey, this will work for you. So let's dive in. Your cash flow statement helps you to understand where are you right now in your business in terms of cash position. You can use this knowledge as a springboard to get to where you want to be, which is to make more profit in your business. You need to invest cash in the business to make more profit because cash is the energy, it's the fuel in the business. So by knowing where are you right now in your cash position, now you can use cash flow management strategies to make more profit in your business. Now, understanding cash flow statement doesn't really have to be complicated. It's just the flow of cash coming in and cash going out. But did you know that 90% of the business they fail in the first 5 years because they run out of cash flow? Somewhere along the line, they mismanage their finance. It doesn't really have to be this way for you. Imagine that you're able to read the cash flow statement and spot the dangers in your business. So step number 1 is to go through your cash opening bank balance for the last 3 months and find out whether the opening balances have been mostly positive or negative. If the opening balance have been positive without you as a business owner investing in the business or getting loan or funds from other sources, it means that you're generating cash from profit operations. If you are not generating cash in the business, if the opening balance have been negative, then it's probably you're bleeding cash in the business, you're not making profit. So have a look at the last 3 months opening bank balance and see the trend. You will find a lot about what's going on in your business. Now let's move on to step number 2. Step number 2 is to review cash coming in into 4 different categories. Category number 1 is cash received from your customers, mastermind, membership, online courses, coaching, consulting, whatever you sell. That's category number 1. Category number 2 is funds that you invest in your business. Category number 3 is bank loan and overdraft facilities. Category number 4 is government grants and subsidies. So go through all the products that you sell and find out which products that you're getting more popular, which products that you're getting more cash in. It's increasing, which products and services your cash is decreasing. In this example, Mega Profit Limited, you can see the mastermind cash coming in is going up, whereas consulting fees are going down. So now you know where you need to focus your time and energy on. So now let's move on to step number 3. Step number 3 is to review cash going out into 7 different categories. Category number 1, cost of sales. So what you buy to sell, what is your cost of fulfillment? Number 2 is overhead expenses. These are expenses that you pay for regardless whether you make sales or not. Number 3 is capital expenditure, office equipment, fixtures and fittings, motor vehicles. Number 4 is loan repayments to the bank. Number 5 is value added tax, sales tax, or GST, you might call it wherever you are in the world. Number 6 is social security contributions, national insurance contributions. Number 7 is corporation tax is the tax that you pay on profits. So go through the pattern of cash going out into these 7 different categories in your cash flow statement for the last 3 months, and you'll find out that what's happening, how much cash is going out into each categories, and what you need to do, and you'll see the pattern to this, and whether you are getting return on investment or not. In this example, Mega Profit Limited, you can see here that by investing in Google ads, the sales has gone down for this business, and as a result of that, the cash has come down in that month. Whereas in investing in Facebook ads, the cash has gone up. So now you know where you need to focus your time and energy on. So now let's move on to step number 4. Step number 4 is to understand the meaning of net cash flow in the business. The net cash flow is simply cash inflow minus cash outflow, which tells you 3 crucial things that you need to know in your business. So number 1, is the net cash flow positive? Yes or no? Has it been positive for the last 3 months? Yes or no? Number 2, which one is bigger? Is it the profit or is it the cash flow for the same period? And number 3, which one is growing faster? Is it the profit or cash flow in the same period? If the net cash flow is less than the profit in the same period, let's say for the last 3 months, it means that there is something wrong in your business. Either there is a credit control issue, or maybe you're paying for supplies up front. So you need to look into that and fix that. So now let's move on to step number 5. Step number 5 is to understand the meaning of cash left in the business. So what does this tell us? This tells us how long can the business last, can survive if there is no more sales, if there is no more cash coming in the business. So out of 7 categories, the cash payments that I've described, the 4 that are more important in this scenario are overhead expenses, payroll, VAT and corporation tax, because they need to be paid regardless whether you make sales or not. So you won't be in a position to be covered for the next 12 weeks if they are due. Then you have a healthy cash position in your business. There you have it, 5 steps to reading your cash flow statement. Here is the summary of 5 steps I've shared above. Step number 1 is to figure out your opening bank balance. Step number 2 is to review cash come in into 4 different categories. Step number 3 is to review cash going out into 7 different categories. Step number 4 is to understand the meaning of net cash flow in your business. Step number 5 is, does the cash left bank balance cover the overhead expenses for the next 3 months? If you got value from this video, then like it and share it. Don't forget to subscribe to the channel and hit on the notification bell so that you don't miss out on future videos which I publish every Tuesday at 4 p.m. GMT. Your comments are my oxygen, so don't forget to comment below. I respond to them all. Now, I would like to turn it over to you. Which step do you struggle with the most, or do you follow any other step? Either way, let me know by leaving a comment below.